Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of January 5th, 2015. Happy New Year. We actually did get a nice present in the new year. Maryland mortgage rates did actually move slightly lower to end the week last week. Take a look at the bond chart on the screen. You can see the black arrow there is the short-term trend is actually for bonds to move higher. Since we got that Christmas present, they bounced off support back at Christmas, and they've been moving higher ever since. And then this past Friday, that giant green candle, we got a big rally in the bond market, which helped move interest rates lower, and that's because the stock market sold off. So the green candles there are a bullish sign, which means we're hoping the mortgage bonds can continue to move higher. So with that in mind, we're going to recommend that you float your Maryland mortgage rate to start the week to see if mortgage rates could improve. Now, if we dig into the economic news, what caused bond market to sell off on Friday was two not so good economic reports. The first one was a report on construction spending showed that it unexpectedly declined in November 2014 and showed its first negative number since June. The second report was a survey on manufacturing growth, and that slowed in December 2014 to the slowest in 6 months. And we also saw foreign manufacturing growth in China and Europe also slowing. So that could be leading indicators that the economic outlook could be slowing versus this big growth pattern we saw at the GDP of 5%. So we're going to have to be on the lookout for that. Then we saw weekly initial jobless claims come out on Wednesday, and they jumped higher by 17,000 claims up to 298,000 claims for the week. That was well above expectations of 286,000. So now, even though claims did jump up, they're still below 300,000, and this marked the 14th week in the last 15 weeks that claims were below 300,000. So that's still a good number. We'll have to make sure that claims don't jump above 300,000 because that would be bad news for the labor market. Now, in housing news, we saw a report last week on pending home sales, and they increased 0.8% for November 2014 above October 2014. So pending home sales measures the number of existing homes that went under contract in the month of November. And that's what's called a leading indicator on housing, because that's going to show how many existing home sales we're going to have in the next 1 to 2 months. So the year-over-year pending home sales were up 4.1%, which was the highest annual gain in 4.5 years. So this is a solid report on housing, and it's a good sign for future existing home sales. We should see those increase for January and February based on this pending home sales. Then we saw the Case-Shiller home price index for October 2014 come out last week, and it came out better than expected at 4.5% year over year. Now that's still down from September of 4.8%, but right in there, a good range. And then we saw Robert Shiller do an interview on CNBC after the report came out, and he said he's still optimistic on housing, and he's projecting that over the next 10 years we'll have an average annual appreciation rate of 4.5%. So what does that mean in real numbers? That means if you own a home today worth $200,000, 10 years from now at that annual appreciation rate, it'll be worth $310,000. So not a bad deal there. So that's a great reason for you to get out there and own a home if you don't own a home right now. And then we saw the Department of Veteran Affairs release the VA loan limits for 2015. And surprisingly, 84 counties in 14 states are actually having their maximum VA loan limit lowered. The good news is Maryland, most of Maryland's going to stay the same. There are some counties in Maryland that will have the maximum loan limit lowered. So in the blog, there is a post on that so you can get all the counties. Now, that doesn't mean you can't borrow above that. For example, the maximum loan limit is $417,000 in Cecil County. You can still borrow more than on a VA loan because there's no maximum loan limit. It just means anything above $417,000 in Cecil County, you have to put down 25% of the amount above the $417,000. So the maximum loan limit is the maximum you can finance with 100%. Now, in the local news, the next first-time homebuyer seminar is coming up Wednesday, January 14th, and that is in Laurel, Maryland. And that is from 6 p.m. to 8 p.m. and that's at the North Laurel Community Center. And then we've got one coming up Saturday, January 17th in Frederick, Maryland at the Urbano Library. And that's from 10 a.m. to noon. And then the next one in Towson is Saturday, January 31st from 10 a.m. to noon at the Sheraton Baltimore North Hotel. You can register for either one of those events by giving us a call at 410-412-3319 or online www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.